So hi there and welcome. Today what I'm going to be doing is a live presentation on how I use a tool called Wardley mapping to do an analysis of a company's strategy. And in particular, I'm interested in Qualcomm, who is a semiconductor company. And I've been tracking the stock now for about 3 or 4 weeks. Today is the earnings call that'll be happening at about 4:45 Eastern Time. And I'll be building a Wardley map live as we listen in on this particular earnings call. Now, the first thing I do when I develop a Wardley map is I get the latest 10K. So even though this afternoon we'll be jumping onto the earnings call, I like to get the previous 10K. Today's earnings call, in fact, is a quarterly report. So I'll try to go back to the last 10K, and I'll read through this 10K and start making notes. And I'm going to show you how I set up the preamble to this before the main earnings call. So there's a little bit of homework that you need to do to make sure you capture all that information in one place and you have it readily available, so that when it comes to doing your map, you've got most of the info and you're certainly familiar with the organization and their various activities that they incur. So what is a Wardley map? You're probably wondering. A Wardley map is a technique which is probably about 10 years old, and it's a fantastic way of drawing and mapping out the strategic plan of an organization. And it gives you the ability to really visualize what the various game plays ahead for the company are. So in the case of Qualcomm, you can read through and digest the 10K. And what you're looking for here are the various components that make up the value chain of what Qualcomm delivers to their customers. And you always begin with the anchored on a customer. And then you figure out what is it that customer needs, or what is it that Qualcomm will be providing that customer. And once you have that particular component, then you dissect that further and you figure out what are the components that you need to support that higher level component. So you start at the top at the customer level and you draw your components going downwards. But that's not where it ends. Then what you do is you spread these components over a axis which is called the evolution axis. And the evolution axis really begins with a genesis on the left-hand side and goes all the way to commodity on the right-hand side, because typically what you'll find is these components will evolve naturally from left to right. And so we'll spread these components out over the Wardley map. We'll link them together where they have linkages. And then we'll begin to identify what kind of movement is going to be happening as the company implements its various strategies. And it's a great way of visualizing what the strategy is of the company, what its competitors are doing, where the company is moving to, where it has gaps and opportunities, and really drawing out the game plays, as it is called, that are ahead for the company. Why I like to use this is that you can then take these game plays and you can translate them into the impact it'll have on their valuation. What will it do to their sales and revenue numbers? What will it impact, or how will it impact the margin numbers? How will it impact the growth and risk of the business? Once you use those strategy drivers to drive those 4 parameters, you can then design the actual valuation. And you can view how that valuation is impacted by these various strategic game plays. Typically, I evolve 1 to 3 game plays, and then I like to look at what those game plays will actually do to the stock price. And that's what helps me in my investment decision making. All right, so here we are looking at Qualcomm, and we're going to build a Wardley map. We've got an upcoming earnings webcast, which we'll join, but we're going to just do the prep work around that beforehand. So the one thing I'm going to show you is how I use Notion to begin the exercise of Wardley mapping, just to capture the key data points. The other thing I'm going to eventually do is we'll get it into a tool called Online Wardley Mapping, where we'll develop the full Wardley map over here. So I've just gone and put the heading in and have it ready now so that we can input the data. But as a starting point, we're actually going to go to the last annual report and sort of weed through there so that we can find the most relevant data. And so it is for November the 4th. The upcoming earnings call is the second quarter earnings call. And so we'll be collecting that information. Actually, I like to view it in its PDF format. I just find it easier to cut and paste and search. So we'll explode that somewhat. And we're going to go through here and essentially extract the value chain. Now, what we'll do is, let me show you a quick a tool. Notion is free, and it's a great way to capture things in a raw format, do some adjustments, and get it kind of a pre-Wardley mapping format, if you will. So we'll add a page here, and we'll call this Qualcomm strategy, and we will go ahead and put in a board, and that's what a board looks like. And we'll just give it the same statuses that Wardley uses. So down at the bottom, this is the evolution axis, and we'll put in Genesis and custom build. And then the next two are product and commodity. So we'll add those in too. Great, so we've got those in. Just to keep things real clean, I'm going to delete these and have it ready. And so great. So we've got a place to store this all. Let's come on in now and begin going through the quarterly reports. If I can just get to the, let me put it real close by, and let's start sifting through it and looking for some of those details. So typically with a Wardley map, we begin with what's called an anchor point, which is really the customer. And so we're looking for any inclination of who the customer is, what are the value-added components that are provided. All right, so I think it's worth, beginning and just setting So here's really where their products are used. Not all of these will land up in a Wardley map, but I like to sort of note them down. So essentially, the big thing that they're doing is inventing stuff. That's pretty clear. Oops. And so smartphones and then the various G's are clearly where they play. 5G, 4G, 3G. I'll just take my headset off while we're not in the earnings call. So wireless technologies, I think we got there, and I'm going to adjust it, sort of fine tune the thing as we go. So, here's sort of the other areas that they're getting into. Actually, we'll just so here's really what they do after a long-winded paragraph. Integrated circuits. So that looks like they actually sell them. And the second piece of the added value is that they license the intellectual property. So you can kind of see their plays are pretty evident. So you start thinking, well, they haven't yet discussed who their typical customer is, but you start thinking these are really coming up pretty high at the top, probably in the custom build area and bleeding into products is my guess. Let's keep going and see where they feature. So this is the ecosystem they play in: manufacturers, operators, developers, system integrators. So I'm going to capture that because it does describe who their sort of stakeholders are, if you will. We'll just paste that in. Alright, so here's the innovations that they've driven. So the primary digital technologies is the transmission of voice and data over radio waves. So the patents and stuff are all around the code division, multiple access, and the orthogonal frequency division, multiple access. So that sounds like their core sort of technologies that they build things on. Again, we're looking for those building blocks. That's really what we're trying to figure out here. And here's some of the other key technologies. So here's some of the other pieces that they have developed. Okay, so we're getting a lot of product information, not a whole lot about the customer right now. Yeah, and so you can see here that they also have a sort of software element to this where they have a couple of other aspects coming in as to what they've developed. Operating systems, user interfaces, graphics and cameras, RF frequency, radio frequency, antennas, and some AI work too. So they've got 3 reportable segments. You've got their CDMA technologies. And I'm actually going to start moving some of the core ones up here. Where did that go? There it is. And so then they've got the technology licensing piece of the business. And that is probably more in the product area. And then they've got a strategic initiatives part of the business. That's their investment side of the business, where they're obviously acquiring various businesses. So I think that was more in the genesis phase, because it's really early startup, probably. Then they have some non-reportable, so they work in the government space. And then AI inference processing, I think, is definitely worth noting down as we sort of build their chain. And that would also be probably pretty early in the life cycle. I'm going to keep it at Genesis just for the moment. Government technologies. Yeah, this begins to talk a little bit to the user base, and we'll plonk that in. It's probably sitting up in that area. We'll see. So here they start talking about the industry trends, and it's really talking about sort of the mobile space where they and the transformations going on there. And so you're starting to begin to get a flavor for how they, sort of where their core products are built. Probably mobile is sounds like a big chunk of what they do. And in that space, it's pretty much focused on the connectivity aspects. So you can see how we sort of tying these together in a hierarchy as we go. So they're going into a little bit of a history here. talking somewhat about the regions, and they're going through the 4G, 3G, and then of course the 5G, and they're talking about specifications. So, obviously we all know that 5G global smartphones, so, that's a clear call out as to must be a big chunk of their offerings. More and more of these smartphones. So that's very much a product which is evolving. Again, they're just talking about the specifications. And they're then talking about, some of these other sort of offerings, the components that they're presumably building for computer vision, sensors, and vehicle-to-vehicle communication. And then, of course, the IoT piece is where they're expecting significant 5G. And then they're getting into the whole demand for smartphones, somewhat of a negative impact, obviously, on COVID-19 and replacement units where they have a dependency. So here you start getting the idea of, this end user, which is obviously the ultimate consumer, probably fitting in somewhere there as a commodity. And you've got your mobile operators and the device manufacturers. So these are definitely beginning to talk about their actual customers or consumer base. And then the manufacturers. Operators, I would imagine, are the operators of the networks. And then they're talking about where really this is being used in other industries and where their inventions are used to accelerate 5G. And I think the automotive industry is definitely worth calling out here. 70% of new vehicles are projected to have connectivity. So cellular technologies is obviously the licensing piece. So here they get into the tech a little bit. You've got the GSM networks, you've got the CDMA, the ability to share the same frequency. And they talk about LTE, but really I'm not yet convinced that is sort of the detail we need. So they're also involved in wireless LANs and presumably developing silicon for that. That's definitely in the product space. They develop, I'm sure, Bluetooth products and local positioning, which looks like it's called assisted GPS, but we'll just keep the term local positioning. So I think here we're starting to get into some of the more interesting components on device AI, and that feels like it would be much more in the custom space. Graphics and display processing. Video coding. Camcorder functions, operating system and user interface features. I think we've captured some of that already. I think security is probably worth mentioning. Content protection, fingerprint readers. So they're inventing around this whole space, charging, presumably the chips that go into those charging stations, power management, and then the whole system on a chip architecture, which I think they're pretty famous for. Grab the whole thing, avoid acronyms where possible. A lot of readers will be, you can see some of their operating segments, revenues. So the actual manufacture of silicon chips, 70%. The licensing is 21%. Crept up, not much, pretty stable. And they're not really disclosing much for the system integration or consulting services. So here they go, a little into their segments. So, integrated circuits is a big thing, and then the system software that is needed to sort of, for the designers and engineers to build this stuff. So I guess integrated circuits are to a large degree custom built, and then let's put the system software, which everything comes combined with software. So to manufacturers, and so I can't remember truthfully, there we captured manufacturers. They would probably be sitting there, I think. So you can see the range of products that these things are used in, just about everything it's touching. There's the famous Snapdragon. So it's sort of a everything on one chip technology designed on an ARM architecture. So you've got signal processing applications. You can see, AI is just creeping into everything. Okay, that got pasted up at the top there. That's 102 pages of 10K. That's actually not a lot, and that's pretty good. The vast majority will be financial information. You can see here sort of when that's coming. Around about there, page 36. So we have about 20 odd pages to go. But we'll go faster and faster as we've got through this. Making tons of stuff, 3D gaming. Snapdragon system on a chip. This is sort of, it's a brand name obviously, but they are super well known for that. You find it in just about every Android device. So they're going through the portfolio of products and getting really into the weeds here. So starting to talk a little bit about the sort of production side of things, and they have this fabless production. So they don't operate foundries for production. And so it's probably worth noting that this goes out to third parties. Supplies, so we've got the raw materials used for the production, and so they don't actually procure it, but definitely a component that goes into the stuff. And so they're talking here about the silicon wafers, package assemblies, electrical connectors, and so they have this concept of foundry suppliers who really take that entire part of the supply chain away from them. So they're very much into the design of the stuff. So this is who they use. Taiwan Manufacturing, United Microelectronics. So they use internal fabrication facilities to manufacture RF FE models. That's the radio frequency stuff. Germany and Singapore. So obviously a mixed model. Their radio frequency stuff. They also have China and Singapore. So how the sales may purchase orders, rescheduling delivery dates within a defined time chain, because they have to fit into a sort of supply chain. So, I wanted to bring in this word designers because I really think it's a big part of the it's probably pretty high up there. So here they're talking really about defect rates and reliability, which is really a core piece. Going probably lower down in this chain. Where did it paste it to? Just in case I didn't get it. And then reliability. So here they talk about their competitors. This is the licensing part of the business here. Again, they're going into what and they license to who. So let's capture. So really, I mean, this is one of their key assets here, is this portfolio. And then they have patents, sort of foreign patents worldwide. So standards bodies definitely are coming into this, and they work closely with them on the sort of patents. So they different types of fees, royalties, and to a lesser degree license fees. Percentage of wholesale selling price of completed products. So a big, part of this is sort of the legal proceedings, that because they're in that patent business, and that's a continual threat. Government investigations and legal proceedings. All right. Now the strategic investments piece of the business. Early stage companies. Sort of the genesis piece of their business. All right, so I think we're going to speed up now. They're talking about their subsidiaries. And here you get a flavor for, the big chunks that are needed. So obviously there's a big sort of engineering team, and then I would imagine research and development. Being another piece. And so this is an interesting part where there's a small number of customers have historically accounted for a significant portion of revenues. And it's Samsung, Xiaomi, in 2012 they were negatively with Apple and its contract manufacturers. So obviously we know about that debate. So here we get into the R&D side of the business, and I'm not sure there's a whole lot more we should abstract here. The level of detail is good enough for what we need. They're talking about their portfolio, and again the kinds of things that they're developing. And then they have a sales and marketing function, and we'll capture that too. Trade shows, white papers. Get into competition. Then they're talking about ESG and human capital. And they're going to be a responsible business, our people, personal innovation, and the STEM education, which I think is quite interesting, as they logically says they should promote that, because that's where they're getting their people from, So there's sort of some numbers. Have been increasing engineering, so 41,000. Let's capture that. Oh, and part-time. So turnover less than 5%. I think that's pretty decent. There must be a lot of competition for their people. So I think there's something I've read about Apple coming into their region location, San Diego. Diversity, health and safety, compensation, benefits, all the usual stuff, talent development. All right, so then we getting into the offices. I think they have a new CEO on the way. And these are the guys that we'll hear in a little bit on the call. So now we get into the risk factors. I found that you can abstract a reasonable amount from these risk factors. So that'll be the last segment of this as we sort of wind down. Obviously, they mentioned COVID-19, and there's no need to put that in play. So, I mean, they're heavily dependent on their customers selling product. So you've got the sort of wireless technology transitions that occur because we're continually moving from 1G to the other. All right, they're talking about competition. Obviously, price points and costs are critical in this industry. Almost makes, an awareness that their products are, although I've shifted, they're commodity products to a degree. Perhaps they become commodity products or something. There's definitely a move from left to right. So this vertical integration, customers vertical integrate, that's what Apple essentially did to them, but I think that's a major potential threat with putting up there. And then this concentration in China, I think is also worth mentioning because a significant chunk of their business comes from that China space. And so, they really have a small number of customers generating a big chunk of their revenues. So Apple do purchase their thin modem, but they don't include the integrated processors in them. Interesting, I haven't come anything about the silicon shortage. So you can see the mention of premium tiered devices, and I think it's worth sort of drawing that into our map, because I think product is definitely evolving in that direction in this industry. So they have 300 licensees. I think that's an interesting statistic that we can capture. I like to capture a few of these numbers as we develop the map. That vertical integration. There's the China risk, and then so you've got the actions by courts, regulatory agencies, and standards development folks, and so that's a big factor in their business. And litigation. Pretty sure we've got that somewhere, but it's no doubt. It's they in court a lot, these guys. Disputed, underreported, underpaid, not reported. So you've got this sort of big issue with licensing. And that's the whole tracking. So SDOs have encouraged them to change their intellectual property policies. Government investigations, private legal proceedings. We've captured that. So the patent portfolio is obviously fundamental to this business. We'll treat it for the moment like a product. So the third-party suppliers for procurement, is clearly a dependency for some of their circuits. Pretty much a commodity supplier. So they own the manufacturing facilities for these types of products, which are the radio frequency. So a really interesting business model beginning to form. Yeah, they're talking here about raw materials and how that's all impacted. So it'll be interesting to hear the earnings call in a bit. I'm sure they will be addressing that. So it is really the ability, they're clearly recognizing the need to develop beyond mobile, and that, take their technology into that space, especially with 5G and IoT. They're clearly adjacent industry segments are critical. So strategic acquisitions for that third business segment is a big piece of that, and we may have that somewhere. Can't recall. So security breaches and chips, definitely an issue, especially with them working. Presumably they got some factories in China too. So retaining qualified employees, that's a big deal. Unauthorized use of intellectual property. So a lot of this now being reused, restated, and you can see here they are using a bunch of open source software, and there's presumably some safeguards around that. And then we're coming to the end. General risk factors. And here they're just talking about the things that a general business, their debt, their tax liabilities. And now we're getting into the numbers. So we're coming to the end of our little bit of research phase. We'll do a scan through and just see if anything sticks out, and kind of the things to look for in a 10K. So you can see they're breaking down their revenues, just highlighting some key financial numbers. And then they're getting into COVID-19. And now they're talking about seasonality. So this is probably worth picking out, because this ties in with sort of the big announcements by the big phone manufacturers. So here's the breakdown in revenues. Surprisingly, licensing isn't as big as I thought. You can see they had a $4.7 billion licensing decrease because of a settlement with Apple. So lots of things happen over the years to them. Alright, so that's interesting. Here is the effective tax rate is very low, 9%. And we'll talk about that a bit later in terms of their how I came to find them is because they have a very low enterprise value to EBITDA ratio, yet their fundamentals are really good. So I think they may be mispriced at the moment. That's for a separate discussion. All right, so I think we're getting close to the end of anything that impacts our Wardley map. Just make a 100% sure. And now we get into the actual financial statements. And they seldom have anything. Probably the only thing I would get from them is the research and development, cost of sales, the percentages of revenue that each of those is impacting. So research and development is 25%. Let's capture that. Oops, that didn't come out too well. 25% of revenues. Selling and administrative is really low for obvious reasons. Oh goodness. We'll put these on the map a little bit later, and there's cost of goods sold or cost of revenues. 61%. That is it. So really that's taking 25, that's about 10, that's 35%. And your gross margin, this is a gross margin rather than percentage of revenue, so 61%. Let's make a note and update that to gross margin. Okay, great. So we'll come back and update this a little bit later on. The aim right now is to start turning it into a map and mapping these components. Obviously it looks a little messy now, but it gives you an idea of the main pieces of the value chain. I haven't been too fussy as to where different things lie. We'll begin the process after the break of plotting manufacturers, operators, consumers sort of along the top here, and then we'll start developing each of the pieces that feed each other in the value chain, and then stretch them out on the Wardley map. And then we'll listen in on the earnings call and pick up from that. So I'm going to take a short break, and we'll continue this in about 15 minutes. All right, so we're back now. If you remember, we got to a point where we compiled the beginnings of the Wardley map. We're eventually going to plot it onto the full Wardley map, but we're now going to get ready to join the earnings call.
Ladies and gentlemen, thank you for standing by. Welcome to the Qualcomm second quarter and fiscal 2021 earnings conference call. At this time, all participants are in a listen-only mode. Later, we will conduct a question and answer session. If you would like to ask a question during this time, press star, then the number 1 on your telephone keypad. To withdraw your question, press star, then the number 2.
So we're just going to monitor the call now and help us inform some of these points so we can move them around and so on.
April 28, 2021. The playback number for today's call is 877-660-6853. International callers, please dial 201-612-7415. The playback reservation number is 137-18356. I would now like to turn the call over to Mauricio Lopez-Hodoyan, Vice President of Investor Relations. Mr. Lopez-Hodoyan, please go ahead.
Thank you, and good afternoon, everyone. Today's call will include prepared remarks by Steve Molinkov, Cristiano Amon, and Akash Palkhiwala. In addition, Alex Rogers and Don Rosenberg will join the question and answer session. You can access our earnings release and a slide presentation that accompany this call on our Investor Relations website. In addition, this call is being webcast on Qualcomm.com, and a replay will be available on our website later today. During the call, we will use non-GAAP financial measures as defined in Regulation G, and you can find the related reconciliations to GAAP on our website. We will also make forward-looking statements, including projections and estimates of future events, business or industry trends, or business or financial results. Actual events or results could differ materially from those projected in our forward-looking statements. Please refer to our SEC filings, including our most recent 10-K, which contain important factors that could cause actual results to differ materially from the forward-looking statements. And now to comments from Qualcomm's Chief Executive Officer, Steve Molinkov.
Thank you, Mauricio, and good afternoon, everyone. Thanks for joining us today. When we reported Q2 just 1 year ago, we were in the early stages of the pandemic. Much has happened since then, including many things that will define our future well beyond this past year. One of the undeniable things we have experienced, and at an accelerated pace, is the importance and reliance global citizens have on robust connectivity and the need for low-power, high-performance devices. This has reinforced and amplified our mission. Sitting here in San Diego today, we are optimistic about what we see on the horizon. Yet while the pandemic impacted nearly everyone at the same time last year, the experience today is very different depending on where you are in the world. In particular, I want to acknowledge our employees, customers, and partners in India. You and your families are in our thoughts, and we are here to support you through this very challenging time. Of the many things that have impressed me during my 26-year career at Qualcomm, at the top of the list is how our company mobilized in the past year, leading to strong results like we reported today. Our fiscal second quarter non-GAAP earnings of $1.90 per share exceeded the high end of our guidance, driven by higher licensing revenues and solid performance in our chipset business, representing non-GAAP revenue and EPS year-over-year growth of 52% and 116% respectively. Despite the backdrop of a challenging environment, these results and our guidance reflect the strength of the company and the importance of our technologies, not only to the mobile industry, but across many industries. Several years ago, we put in place a strategy to lead in 5G, which today is delivering results beyond our expectations. Even this fiscal year, with all the unusual challenges, we are on track to deliver results better than what we expected when we started the fiscal year. As exciting as our current performance is, I cannot underestimate the long-term opportunity for Qualcomm and how well-positioned the company is, where we have a unique opportunity to exceed our success in handsets as industries adopt the wireless roadmap. This enviable position is what I find most rewarding when looking back over the past 7 years. Undeniably, over my tenure as CEO, I dealt with and overcame unprecedented challenges, which I always put in perspective. Our mission and singular focus of inventing breakthrough technologies, transforming how the world connects, computes, and communicates is important and hard to do. Our challenges tightened our focus on this mission, and at the core, innovation was always the solution. As a result, Qualcomm enters the 5G era with our whole company stronger and more resilient. Most importantly, we never lost focus on the impact and opportunity digitization will bring to our customers, partners, governments, and consumers worldwide as a result of our collective efforts. Speaking as a soon-to-be former CEO, I believe there is virtually no limit on where Cristiano can lead Qualcomm, the industries he can enter, and the role the company can play in the global ecosystem. I am very excited to watch this play out. To all our employees, I thank you for your tireless devotion and commitment to our strong culture and core values. I know it is very exciting for everyone at Qualcomm to witness how our inventions change the lives of billions of people around the world, as we know they will. Thank you. I will now turn the call over to Cristiano.
Thank you, Steve, and good afternoon, everyone. Thanks for joining us today. The quarter and guide reflect the great execution across the company in a very challenging environment and reinforces the significance of our technologies. Our Snapdragon premium and high-tier products, along with our modem-to-antenna RF front-end, are the foundation of our 5G handset strategy now and into the future. The expansion of our addressable market in these smartphone tiers has positioned the Snapdragon 800 tier as synonymous with Android flagship mobile experiences. We continue to be the mobile technology platform of choice for these tiers, and this is reflected both in our product performance as well as our traction with leading smartphones OEMs such as Samsung, Xiaomi, Oppo, Vivo, and now Honor. Our latest generation Snapdragon 888 5G mobile platform has now more than 40 devices shipped or announced globally, and we expect to see more than double this number come to market in the coming months from future product announcements. Our highly differentiated position in premium and high tiers, our modem-to-antenna leadership, and the continued transition of Huawei volume to OEMs using our solutions have positioned us to grow faster in smartphones while being able to capture the most significant portion of the revenue opportunity. In RF front end, we continue to see broad and growing adoption of our solutions. 5G leading performance at the component and system level, ease of design, and global reach continue to be key differentiators of our modem-to-antenna solutions. As a reminder, virtually all of our 5G design wins continue to be powered by our RF front-end solutions, whether they support 4G, 5G sub-6, or 5G millimeter wave. Beyond smartphones, we're extending our RF front-end solutions in automotive, PCs, mobile hotspots, fixed wireless access in the broad IoT category. Of note, given our design win pipeline and revenue run rates, we are on track to exceed our Analyst Day RF front-end revenue target of $3.6 billion by fiscal year 22, with 5G sub-6 and 4G representing the majority of our RF front-end revenues. Additionally, as 5G millimeter wave technology expands into other geographies, we expect significant expansion of our opportunity due to increased silicon content and value. At Mobile World Congress Shanghai in China, and in collaboration with China Unicom, ZTE, and the GSMA, we worked with 39 Chinese industry-leading companies to showcase the high performance and rich applications on a live 5G millimeter wave network. This level of collaboration underscores the significant attention to millimeter wave in China and the opportunity ahead beginning in 2022. In automotive, we're growing across telematics, CV2X, digital cockpit, ADAS and autonomy, and we're also well positioned for upcoming general computing and car-to-cloud platforms. We expect to lead in the segments as cloud-connected business models evolve and electrification of the car accelerates. As the digital chassis become one of the most important assets of automakers, we are becoming a leading technology partner for the automotive industry with capabilities across all these domains. Our automotive design win pipeline is up over $1 billion since the end of fiscal 20 to approximately
I think that's a
$9
big
billion today.
segment that they'll be playing in.
Along with auto, IoT is becoming a significant growth engine with better than anticipated performance across all categories, namely consumer, networking, and industrial. We achieved our second consecutive quarter of over $1 billion in revenue. Trends such as the enterprise transformation of the home expansion of broadband, the convergence of personal computing with mobile, the intersection of physical and virtual spaces, and the ongoing digital transformation across many verticals are driving growth in one of the largest SAM expansions opportunities for us. In consumer, as the industry redefines personal computing, we're confident about our growth in Android, Chrome OS, and Windows on Snapdragon, where we expect new products with leading NUVIA CPUs by the end of the next calendar year. We're also seeing our early investments in XR platforms reaching scale. And in the growing category of wearables, we believe Snapdragon Sound and Snapdragon Wear will become the leading technology solutions within the Android ecosystem. In networking, we are a leader in Wi-Fi access points and 5G broadband. We're benefiting from the global connectivity required for remote work, school and play, and the migration to Wi-Fi 6 and mesh technologies. Our 5G fixed wireless access solutions are seeing
Wi-Fi 6, that's the first I've heard.
Going forward, we also have an opportunity to expand into upcoming private 5G networks and public Open RAN. In industrial, we have seen continued adoption of our technologies across the broad industry segments. Key growth areas, to name a few, include smart energy, tracking, metering, industrial handhelds, retail, automation, and autonomous drones. As connected IoT edge devices get scale and provide access to the data and contextual information that is fueling the exponential growth projections of cloud ecosystems, we're increasingly confident in the long-term growth opportunity for our IoT business. Turning to our licensing business, our second quarter results reflect the strength of our unmatched patent portfolio value. We are the global 5G IP leader with more than 130 5G license agreements signed to date, up from over 120 last quarter, with all major handset manufacturers around the globe licensed. We continue to develop and patent new essential innovations for future releases of 5G, which we expect to have a longer life cycle than prior generations due to its impact on multiple industries. We believe that our model of early research and development, consistent standards leadership, flexible licensing, and global implementation support will continue to add value to our partners and stockholders for years to come. Overall, we continue to see unprecedented demand across all of our technologies and businesses as the current environment is accelerating the scale of connectivity and processing at the edge. Despite the industry-wide semiconductor supply shortage, we're utilizing our scale and working across our entire global supply chain to maximize our ability to capture this opportunity. We expect material improvements by the end of the calendar year due to planned capacity builds and multi-sourcing initiatives. As one of the leading drivers of advanced semiconductor technology platforms, we're also excited to see more foundry investment in the United States consistent with the United States government's strategic priorities. Finally, we're extremely proud of our collaboration with NASA's Jet Propulsion Laboratory on Ingenuity, the Mars helicopter powered by Snapdragon. Snapdragon made it to Mars and helped power the first ever autonomous flight on another planet. This is yet another example of our
inside
ingenuity.
that Mars helicopter.
I would now like to turn the call over to Akash.
Thank you, Cristiano, and good afternoon, everyone. We are pleased to report strong second quarter results with non-GAAP revenues of $7.9 billion and non-GAAP EPS of $1.90, which was 15 cents above the high end of our guidance range. These results reflect year-over-year increases of 52% and 116% in revenue and EPS respectively, driven by strength across QTL and QCT. In QTL, we recorded revenues of $1.6 billion and EBT margins of 74%, acronyms, both above the high end of our guidance range. The outperformance was primarily driven by stronger handset shipments, especially in China. In addition, our results include a benefit of approximately $80 million from adjustments to prior quarter royalty estimates. In QCT, we delivered revenues of $6.3 billion and EBT of $1.6 billion. On a year-over-year basis, revenues were up 53%, while EBT grew 137%, delivering on our commitment to increase operating leverage. We achieved the high end of our guidance range with EBT margins of 25%. This reflects our strong operating performance driven by favorable product mix and gross margins, which more than offset a reduction in the orders within the quarter by a global handset OEM. RF front-end revenues increased 39% year-over-year to approximately $900 million on the strength of our product portfolio across 4G, 5G sub-6, and 5G millimeter wave. 5G millimeter wave products accounted for less than 20% of our second quarter RF front-end revenues. We expect millimeter wave deployments in other regions, such as China, to be a tailwind for long-term revenue growth. Automotive revenues of $240 million grew 40%, and IoT revenues of $1.1 billion grew 71% on a year-over-year basis, as we continued to see strong momentum for our differentiated product portfolio. During the quarter, we completed the acquisition of Nuvia for a purchase price of $1.4 billion before working capital and other adjustments. This acquisition provides us with a strong CPU team with industry-leading expertise in high-performance processors and SoCs. Lastly, we returned approximately $2.3 billion to stockholders during the quarter, consisting of $734 million in dividends and $1.5 billion in stock repurchases. Turning to our global 3G, 4G, 5G handset forecast for calendar 2021. Based on the strength in the first quarter, we have an upward bias relative to our prior estimate of high single-digit year-over-year growth. Our calendar 2021 forecast continues to include an estimate of 450 to 550 million 5G handsets. Next, I'll summarize our guidance for third fiscal quarter. We now expect a stronger outlook in both QTL and QCT relative to our prior expectations, which we shared last quarter due to several positive tailwinds. We're forecasting revenues of $7.1 to $7.9 billion and non-GAAP EPS of $1.55 to $1.75, with year-over-year growth of 53% and 92% respectively at the midpoints. In QTL, we expect revenues of $1.35 to $1.55 billion, up 39% year-over-year at the midpoint, with EBT margins of 68 to 72%. Our revenue guidance midpoint is $100 million higher than our previous estimate, reflecting the positive bias in total handset shipments. In QCT, we estimate revenues of $5.8 to $6.3 billion and EBT margins of 24 to 26%. At the midpoints, this represents year-over-year revenue growth of 59% and EBT dollar growth of 151%. Our stronger forecast for QCT reflects upside in IoT, design traction in handsets and RF front-end, and improved product mix. We are pleased with the success of our diversification strategy as we continue to extend the adoption of smartphone technologies in automotive and IoT. In the third quarter, we expect IoT revenues to increase to $1.3 billion. We anticipate non-GAAP combined R&D and SG&A expenses to grow 3 to 4% sequentially, which includes a full quarter impact of expenses from the Nuvia acquisition and investments to enable additional sourcing for supply. Beyond third quarter, we expect growth to be driven by 5G flagship launches for the holiday season by major OEMs and strong demand across IoT and automotive. In addition, with the continued transition of Huawei handset volume to other OEMs, we estimate QCT's annual addressable handset and RF front-end revenue opportunity to increase by up to $10 billion. Given our strong product portfolio, we are positioned to benefit from this opportunity starting in fiscal 22. Before I finish my prepared remarks, on behalf of all Qualcomm employees, I want to thank Steve for his contributions over the past 26 years and wish him the best for a well-deserved retirement as CEO. During his successful tenure as CEO, he navigated significant challenges to put the company in a strong financial and strategic position. I look forward to working with Cristiano and the rest of the Qualcomm team to build on his vision and capitalize on the opportunities in front of us. Thank you, and I'll now turn the call back to Mauricio.
Thank you, Kosh. Operator, we are now ready for questions.
Thank you. To queue
So
a question,
usually
press
in
star, then
the
the number 1.
financial
To
side
withdraw
you
your
don't get
question, press
much,
star 2.
but
If you're using a
the
speakerphone,
questions
please pick up your
often
handset
yield
before
some
pressing the numbers.
good
One
thoughts
moment, please, for the first
around the
question.
value chain. Although we
Our
look
first
fairly
question is from
exhaustive
Mike
here.
Wardley with Canaccord Genuity. Please proceed.
Great. Thank you. Congratulations on the strong results. And Steve, my best wishes for whatever's next, including some hopeful, fruitful fishing trips for you. My question for the group is, with June seasonally softer quarter for QCT, but the guidance is quite strong, can you just update us if there's any supply constraints that are still adversely impacting the guidance for the June quarter? And then
he's talking here about the silicon shortage affecting the technology division.
For the second half of calendar 2021 in terms of potential share gains for you into the Android installed base. Thank you.
Yeah, hi Mike, it's Akash. I'll take the first one. From a third quarter perspective, we're really seeing a lot of benefits on the QCT side, both in terms of kind of improved product mix, which is helping our performance. What we're seeing there is really, since we saw supply constraints, and which we continue to see across a broad set of businesses, we were able to take action to optimize our product mix, both across tiers, and then also when we had reductions in orders by a large OEM, handset OEM, we were able to redirect that capacity to integrated Snapdragon products with strong margin profile. So it's really a combination of those things. So while we remain in supply constraint, we've been taking actions to manage to optimize the mix within the constraints we have. Your second question was
just on the
I can take that. This is Cristiano. Look, we're extremely happy at the opportunity in terms of SAN expansion. If you look at a market such as mobile, which is mature, you don't see that very often, an expansion of SAN at about $10 billion. And Qualcomm's very well positioned for that. So as far as second half 21, we're very happy with the traction we have in our premium and high tiers across our customer base, with new customers as well as Honor, and that's a great opportunity. It's going to be one of the largest growth drivers for our mobile business alongside our front end, the ability to have Snapdragon 800 equal premium Android.
Thank you.
Thank you. Our next question is from Chris Caso with Raymond James. Please proceed with your question.
Yes, thank you. Good afternoon, and Steve, congratulations, all the best. The first question is related to supply, and you talked about in your prepared remarks supply coming at the end of the year and being able to attack that Huawei replacement market in fiscal 22. Can you give us some sense of how much incremental supply comes in before then, or do we have to wait until the December quarter in order to get that volume? And as a follow-on to that, how does that align with your customer product introductions? Again, a lot of product introductions, typically happen toward the beginning of the year in the Android space.
Hi, Chris. This is Cristiano. Look, there's a lot in there. Let me just start with the supply. The overall supply, constraints in semiconductors for us is really across all product lines. It's not unique to one thing or the other. It's not only smartphones. Frankly, it's a good position to be in that we actually have more demand to supply across all of our business, and that's a good sign. Give us confidence about the growth position. We are utilizing our scale, and with that, we have the ability to be supporting our suppliers' capacity planning. We can provide, stability of demand and in turn get stability of capacity. We're one of the few companies that have the ability to do multi-sourcing at the leading node, and we have done a lot of that with our roadmap. All of that to combine, it give us material improvements in supply by the end of 21, positioned us very well for 2022 and the full extent, I think, as Akash outlined, the 10 billion SAM expansion on Huawei. Now, I want to go back to your question about how we think about our customers and customer product introductions. As I said before, we're very happy with the progress we're making in premium and high tier. It's a great opportunity for Qualcomm. It is reflecting in the product mix. As we still have right now, even as we show growth, we still have more demand to supply, give us an opportunity also to have the ability to focus on the products that give us more value to us and to our customers, both on the premium side with RF front-end attach, and that's really showing the numbers with a much improved product mix.
And then, Chris, it's Akash. Just to add quickly to Cristiano's comments, as you know, towards the end of the year, a lot of the flagship phones get launched, both for the holiday season going into Chinese New Year. And so we do feel that with supply constraints opening up a bit, that allows us to take advantage of those launches and really expand into the Huawei SAM.
That's great. That's good color. Thank you. Next question is on QTL, and based on your guidance, it would seem
that's the licensing division.
The revenue that you're suggesting for the third quarter is back on what you previously expressed as the normalized QTL revenue. Is that what we should expect now going forward? Is that the reflection of the handset market is now normalized, and therefore the QTL revenue is normalized against the plan that you've talked about in the past?
Yeah, that's definitely a reasonable conclusion. We did see significant upside in the March quarter, and which is reflected in our results. But as we go from March to June, what we are forecasting is really a normalized market within the handset market, consistent with the historical framework we've set up, and that's a reasonable way to model the business going forward.
Thank you. Our next question comes from Joe Moore with Morgan Stanley. Please proceed with your question.
Great, thank you. Wonder if you could give us more color on the reduction in orders you talked about from one vendor. How does that play out when you're in kind of an allocated environment? And then in terms of the supply constraints, maybe if you could just talk about, if I'm placing a new order now that's not in backlog, like how long am I waiting? How tight is the situation? Thank you.
Yeah, Joe, it's Akash. Really, as you would expect, given the kind of broad breadth of demand we have across not just mobile, but all of our adjacent markets, including IoT and auto, we take benefit of any reductions on orders from an OEM to really redirect the supply towards the highest margin products that we have in working with our customers. So that's really the action we took. It's obviously a good thing for us to be able to optimize the available supply across our customer base, and that's what's reflected as one of the benefits in our June quarter guidance.
Maybe if I can address here, Joe, your second question. As far as supply constraints, not much more than it's going to get better at the end of the year. So some of the orders that we still cannot fulfill, even though we're seeing growth and it's reflected in results in the guide, we expect to see towards the end of the year and in 2022 a much more favorable supply environment.
Yeah, I think the supply chain issues being overthought, and they seem a little bit more relaxed about it for the end of the year.
Sequential guide across the businesses. You're guiding Q2 down 10%. It looks like chip revenues guided down about 4%. I know you talk about normalization of the market, but is that just a timing thing given the nature of the constraints and what you're making? Is it indicative of mix of like the interplay between handset versus non-handset? What can you tell us about the drivers behind the differences of those two segment guides?
Sure, Stacy, it's Akash. So let me start with QTL. As I mentioned in my prepared remarks, the two key drivers for QTL in the March quarter were significantly higher than expected units, primarily driven by China for the total handset markets. That was the main driver. And then we also did see a benefit of approximately $80 million due to adjustments to prior quarter royalty estimates that benefited our second quarter performance. So as we go from Q2 to Q3, on the QTL side, we obviously don't have that royalty estimates adjustment benefit in Q3. And then the second factor is really what we're assuming is a more normalized handset market going into Q3. We saw some weakness in the December quarter, strength in the March quarter, but when you kind of abstract back from the quarter-to-quarter variances, we think it's prudent to forecast going forward on a normalized market. So that's really what's driving QTL. From a QCT perspective, you're right. We are assuming a 4% quarter-over-quarter decline. As you'll recall, our new premium tier product launches in the March quarter. So when we go typically from March to June, there's a little bit of seasonality. Part of that is offset by really the supply framework, and so that kind of calibrates a little bit on what happens between the quarters anyways. So that's really kind of the key drivers there. The one thing I'll highlight is, and I mentioned this in my prepared remarks, for IoT, we have very strong demand going into the June quarter. We have a forecast of $1.3 billion increasing from $1.1 billion in March. So very happy to see the diversification across the businesses.
That's helpful. Thank you. If I could ask a brief follow-up, I know you called out Honor specifically several times as both a customer and a potential growth driver. Can you talk a little bit more about them? Do you have any thoughts on where, I guess your share is low today, but any thoughts on where that can go, what your average, ASP or tier that you're attacking with Honor is going to be? And does the Huawei license that you signed last year, does that license directly transfer over to Honor, or did you have to sign a new license with them? If that's the case, have you signed one with them?
Stacy, this is Alex. Let me just answer that question really quickly. We have separate agreements now with Huawei and with Honor, so all of that is covered under separate licenses.
Hi, Stacy. This is Cristiano. We had traction with Honor, across their product portfolio. But, as you would expect, a lot of our focus, and that's where we actually have a very unique position in the market, is really high-end premium tier. And that has also been kind of, as I said earlier, it's really reflected how our product mix is changing as we see a lot more demand for premium and high.
And then, Stacy, I'd just add, it's Akasha. I'd just add that we do expect Honor to be a significant customer going forward with our traction with them.
Thank you. The next question comes from Blaine Curtis with Barclays. Please proceed with your question.
Hey, thanks for taking my question. I want to ask on millimeter wave. You talked about, I think, China in fiscal 22. So I was curious if you saw any additional geographies rolling out millimeter wave this fiscal year, or this calendar year, rather.
Hi, Blaine. This is Cristiano. Millimeter wave is commercial today in the United States and Japan. We also see a lot of investment in Korea as the next market. There are a few things you see as the initial signs in Europe. It's auctions have completed in some states. We're excited about China just given the scale of the China market. Right now, we have a lot of activity.
Yeah, I was just looking at regions, and one thing to note is that a 10Q, which this is the quarterly fiscal results, often doesn't have the detail on geographies or regions broken out.
The reason we talk about China is because the scale of China will significantly change the dynamics of millimeter wave, getting it faster to more markets.
Before, just curious, there's a lot more focus on both client as well as data center for ARM processors. Maybe just elaborate your plans in the next couple of years and where you see the best opportunities to deliver that Nuvia asset.
The Nuvia asset gives us a lot of flexibility. You should think about it as having a scalable leading CPU asset to get together with the other Qualcomm assets. Our focus right now, as outlined in what we've been saying and what we said in the earnings call, is we have an incredible opportunity now with compute and, of course, premium tier, phones and automotive and some of the segments we are right now. We are very happy how computing has been redefined. Number one use case on a PC right now is a communicator device. I'm sure you relate to this. And some of the transition across the board to ARM architecture really create a big expansion opportunity for Qualcomm, and we're very focused to make that happen with a leading position leveraging the Nuvia CPU. Having said that, I think this asset gives us a lot of flexibility to continue to be expanding and to all of the different, business vectors we're building in the company.
Thank you. Our next question comes from the line of Ross Seymour with Deutsche Bank. Please proceed with your question.
Hi, guys. Thanks for letting me ask a question. And Steve, congratulations on your retirement. I guess, Akash, one for you is, in the last couple of quarters, you've given us a heads up 1 quarter beyond guide, just when there was something unique happening in the market. I guess in this instance, given the fact that you're talking about share gains in the Huawei ecosystem, seasonality has had different implications over the last couple of years with some of your bigger customers. Is there any sort of color that you're able to give in the back half of this calendar year, puts and takes versus what you would deem to be normal? Any sort of guidance along those metrics?
Yeah, sure, Ross. While we're not guiding fourth quarter at this point, really, let me highlight a couple things that maybe is a framework to think about the rest of the year. First is just when you think about the demand profile, handsets, RFFE, IoT, automotive, really extremely strong. We're gaining share pretty much in all markets and very strong position in each of them. So you should think of each of those as a growth vector for us, and extending into kind of Q4 and then going into next year. Second is flagship phone launches. As I mentioned earlier in the call, they usually start in the August-September timeframe, going through December. And so as those launches happen, that's a favorable trend for us, not just for handsets, but for RF front end as well, with or without millimeter wave. And then the third is really supply improvement. As Cristiano mentioned, we've been working very hard on kind of partnership with our suppliers to improve the supply profile going forward. And as he said, towards the end of the year, we expect a material improvement in supply. So that will be another vector that will drive us forward. And so those maybe are 3 things that can be used to frame the QCT profile. And then from a QTL perspective, it's really consistent with our model, the way we've portrayed it. As seasonality in the handset market changes, that changes the revenue opportunity for QTL as well.
Got it. Thanks for those details. I guess as my quick follow-up, Akash, another one for you on the gross margin side of things. We know the perturbations that happen with mix between QCT and QTL, but the QCT side has been very, very strong. I just wanted to see, what are you envisioning as the sustainable drivers of that? Are the gross margins today at all over-elevated or inflated due to your ability to prioritize in a limited supply environment? Or are there attributions of the mix or aspects of the mix between handsets, RF, auto, IoT, et cetera, that gives you the belief that the gross margin improvement that you've delivered in QCT thus far is truly sustainable and can continue?
Yeah, Ross, we feel like we have tailwinds on the gross margin side, really across the mix of products, across the markets we have, but also within each market. And it's really Cristiano's point earlier in the call, where we're focusing on the industry-leading performance across premium and high-tier products that allows us to really have that price premium that results in expansion of margins. Also, as we kind of take the product that we have for mobile and the technologies we have for mobile and we leverage it in auto and IoT, that's a tremendously scalable way for us to expand in those markets. And as we do that, we're also able to expand not just gross margins, but also operating margins.
Thank you. Our next question comes from Matt Ramsey with Cowen. Please proceed with your question.
Yes, thank you very much. Good afternoon, guys. Akash, my first question is on QCT EBIT or operating margins. I mean, I think I went back and looked, and we're pre-2010, I mean, but pre-4G, since you had a non-holiday quarter that was 25% margin. So well done there. Maybe you could talk a little bit about the sustainability of margin expansion in QCT, and given the June quarter is likely the revenue trough quarter for the year, is that 25% margin how we should think about the floor in margins going forward? Thanks.
Yeah, Matt, thanks for the question. We're really happy with how the margin profile has played out. I mean, it's a plan that we set in place and outlined at Analyst Day about 18 months ago, and we're pretty happy to be able to execute to it. Your observation is right. I mean, typically the June quarter is a drop from a margin perspective, and really, as you look forward from here, for us, the most important thing is the revenue scale, and hence the things we highlighted in my prepared remarks, both from a IoT growth perspective, just gives us scale that allows us to expand operating margins. And then finally, the Huawei SAM, as we start approaching that SAM and really leveraging the existing products and roadmap, both across handsets and RF front end, and growing into that SAM. We already have the product portfolio to go there. So as we grow there as well, it'll be accretive to operating margins. So pretty happy with where we are at, and looking forward to improving it going forward.
Got it. Thanks for that. As my follow-up for Cristiano, you guys were kind enough to share a slide tonight that highlighted the diversity of the RF footprint across, I think, I don't know, a dozen or so premium Android devices, both from global OEMs and in China. The question that I still get from investors is your confidence in the ability to sustain or maybe expand that footprint as we go into next generation devices, maybe as some of the RF competitors have a bit more mature 5G stances in their portfolio. So do you have any visibility as to how with those OEMs, the footprint might continue as you go forward and be sustainable in the RF franchise? That would be really helpful. Thanks, guys.
No, look, Matt, thanks for the question. It's a great question. And I want to start by maybe, providing some data points and make emphasize some of the data we provide in the earnings script. We heard a lot in the past that our front-end business, a lot of people thought that most of it was because of our leadership position in millimeter wave, which we do have a leadership position in millimeter wave. But the reality is millimeter wave represent less than 20% of the revenues that we're showing in RF front-end. The absolute majority of it is
So they're talking here about radio spectrums.
Which actually shows that we're winning not only at the system level, we're winning at the component level. Otherwise we will not come in as the fifth supplier and be winning 4G sockets. And that is kind of really highlighting what we said. At the end of the day, you're going to have every single spectrum, whether it's existing spectrum through DSS that goes to 5G, plus the new mid bands and the millimeter wave bands. We feel pretty good about our roadmap of RF front end. The fact they're winning designs across the board, it's a testimony that our strategy is working. And to your specific question about is this going to go away, we're now probably, if you look at the beginning when we launched 5G in 2019, in early 2019, we're now multiple product generations, and we continue to win RF front end. So we're very confident about this business. It is a great growth story for Qualcomm, and the beauty of this, we're actually winning on technology.
Thank you. Our next question comes from Samik Chatterjee with JP Morgan. Please proceed with your question.
Hi, this is Joe Cardoso on for Samik. My first question is on competitors. One of them commented pretty bullishly about targeting flagship millimeter wave SoC opportunities next year. So in light of that, just curious to hear on the competitive landscape and market share dynamics going forward.
Oops, I didn't get what he's saying, this guy.
Look, there's a lot of good things in this data point. I think this data point, when our competitors are targeting millimeter wave in China, it just validates that China is going to have millimeter wave, and that's how we read it. That's a great data point, consistent with what we've been saying. It's going to add a lot of scale to millimeter wave. Look, Qualcomm has been very focused in our strong position in premium and high tier. There's an incredible opportunity with the expansion of SAM. Everyone is benefiting. I think it's an opportunity for everyone, to be successful and generate growth. And we really become equal to premium Android flagship opportunity, and that's going to continue to be a key part of our mobile strategy going forward.
Got it. Appreciate the color. And then my second one is on the automotive revenue opportunity. I appreciate the color on the RF revenue target, but was just curious, relative
It's interesting, there's no automotive equivalent of an Android OS yet. I'm wondering if Google's Alphabet will pioneer that.
Or is there more room to make on the pipeline there?
That would be something that includes automated, autonomous driving.
Really, since Analyst Day, we feel like our position has really strengthened. And then this is not just kind of in telematics and infotainment or digital cockpit. We're seeing an expansion of our product portfolio within the market. So while we are not updating the guidance at this point, we feel very comfortable with our position, and we see it as expanding versus where we were 18 months ago.
No question. That automotive side of things is going to be enormous.
Yeah, hi guys, thanks for the question. I wanted to come back to China. I know that last quarter, things were weak, and then we observed that Chinese demand on mobile phones improving this quarter, and that's obviously been part of the QTL story here. I'm just curious, I know that you guys were thinking that China was moving into more of a mature market phase where we would see elongating replacement cycles and so on. I wonder if the result here changes your mind on that at all. And then I also wanted to come back and talk a little bit about RFFE and whether you think you have a chance to see content increasing, as particularly in high-end phones as we move through the back end of the year, or do you think that, on a per phone basis, your content looks roughly similar? So just wonder if you could comment a little bit on how content I meant millimeter wave, not just RFFE, but kind of how that progresses through the back end of the year. Thanks.
Hey, Rod, it's Akash. So on the China data point, we really, the market in December was slightly smaller than we'd expected, and the March quarter was slightly bigger than we had expected. I think you made a note of it in your report as well. But really, when you normalize for it, which is how we think about the forecast going forward, it's reflected in the market guidance we gave. So we think of high single digits as still a reasonable metric for 2021, but we do have upward bias given what has played out, and we'll see how the rest of the year rolls out.
And on millimeter wave, Rod, you're right. If millimeter wave become, a component of the RF front end, we highlighted that today is less than 20% of the RF front end revenues. The silicon and content and value increases substantially. When you do millimeter wave, you're talking about multiple modules into a device, and you have antenna arrays, and it is a key accelerator or RF front end once millimeter wave becomes deployed more broadly across the 5G footprint. Thank you.
Thank you. Our next question comes from the line of Timothy Arcuri with UBS. Please proceed with your question.
Thanks a lot. I guess I wanted to ask about the autos pipeline. It's now up to $9 billion. I assume that most of this is probably parked out into the middle of the decade, something like that. But can you sort of help us maybe size the average age of that pipeline and maybe how you think that revenue rolls out? It's a big number, but if it's a lot different if it's over 5 years versus over, say, 9 years. So can you help us on that?
Tim, it's Akash. So one of the reasons why we gave a revenue target at Analyst Day was really to put a framework around the annual scale of the business. And so as you'll recall, we said we'd be greater than $1.5 billion in 2024. And so that's still a reasonable way of thinking about that business. And as I said earlier, we feel like our traction in the market has accelerated, and so we're well positioned to kind of execute at that scale and continue to grow really even in the 5-10 year time frame. So it's pretty attractive long-term growth, and we like the fact that it's predictable and it adds a slightly different mix than the rest of our business.
Look, I'll try to give you a little bit more color when you think about the timelines. The development life cycle within the automotive industry is well known. And the way we think about it is when a decision is made and a contract is awarded, usually is you get the technology contract award for the upcoming models. And that's what is exactly building on our pipeline. So everything you see in a pipeline is really basically contract awards, and they start showing up in revenue when those models get to SOP and they launch. and it continued to increase as we're basically expanding throughout, multiple brands as the car companies, try to really be focused on electrification and the digital chassis component of their assets.
Thanks a lot. I guess just as a second question, so Akash, have you sort of handicapped where you think the tax rate could go with these changes? I mean, obviously, if it goes through at face value, and the statutory rate goes to 28%, and if the global intangible low tax income rate goes to 21%, what if you just take that at face value, what does that do to your tax rate?
Well, so I mean, honestly, it's kind of early to see how it plays out, right? We're obviously looking at the various proposals that have been made. So you kind of have one extreme proposal that I think you outlined. There's other proposals that are a lot more favorable. What we're really doing at this point is really working with folks in DC and educating them on the most important thing for us is really to make sure U.S. remains competitive, and there's really strong reason for U.S. companies to continue to invest in R&D, especially the companies like Qualcomm, who have a very high bias towards domestic R&D investments. So that's been our focus. There is missing details in the proposals that doesn't really allow us to give you a right answer to this question just yet, but we're hopeful we'll get some more clarity soon.
Thank you. Our next question is coming from the line of C.J. Muse with Evercore. Please proceed with your question.
Yeah, good afternoon. Thank you for taking the question. I guess first question, can you give a sense of what the revenue headwind for QCT is as a result of supply constraints? And be curious if that's concentrated primarily in handsets, or are you also seeing it on the adjacency front?
Yeah, CJ. So we've not sized the revenue headwinds really within QCT. We have not shared that data point, but it is something that is impacting all of our vectors. So this is not just handsets, but also stretching into RF front end, IoT, and automotive, and it's a very significant number, right? So we could. In a perfect supply situation, we would have been much better off versus the results we are offering. And as we look forward, we think of that as a tailwind as we resolve these supply issues, and things are much better for us towards the end of the year.
You're hearing a lot about these supply issues. I don't think it impacts Qualcomm as much as it does other traditional fabricators.
Two-part question on the adjacency side of your QCT business. Near term into June, do you think that IoT and auto can offset the seasonal decline in RF front end such that business could be flat, excluding handsets? And then bigger picture for fiscal 21, given what you've put together in the first half of the year, it looks like the business combined is growing 50-60% year on year. Is that the right kind of framework we should be thinking about? Thank you.
Yeah, so CJ, we gave a pretty direct number on the IoT forecast for fiscal third quarter. We said it being the 1.3 billion range. So that's a pretty good indication of how that business just continues to grow. We just reported a quarter with 1.1 billion, and then sequential growth from 1.1 to 1.3. Similar trends in auto as well. So this is really a business portfolio that's has strong growth vectors across the board, and as we look forward, we continue to see a similar trend.
Thank you. Our final question is coming from Brett Simpson with Arete Research. Please proceed with your question.
Yeah, thanks very much. I wanted to ask a little bit about QCT and the second half seasonality that you see, second half calendar year seasonality, and just factoring in the supply challenges, particularly in the first half of the year, maybe the weaker flagship Android market in the first half of the year, and then you look into the second half and you're talking about getting much more supply, particularly in the December quarter. Should we be looking at, can you just maybe
just about every question is about supply.
Today? And could it be similar to what we maybe saw in calendar 20? Thank you.
Yeah, so from a second half perspective, clearly kind of as one of the key drivers I outlined earlier was flagship launches that happen starting in the September timeframe. And so we do expect to see seasonality as those launches happen. And it'd be across the board, across all OEMs, across Snapdragon 800 as well. So looking forward to those launches materializing, and especially as Cristiano said, as supply gets addressed to a large extent into that quarter, it'll allow us to benefit from those launches.
Okay, thanks. And maybe just to follow up, Akash, can you maybe just comment on smartphone ASPs? I know it's not something that you specifically comment on as you used to, but it'd be great to get your perspective, particularly with COVID at the moment and 5G adoption sort of like, rising at the moment. How do you see smartphone ASPs, and how do you see the outlook as we go through this year and into next year? Thank you.
Well, as you said, while we don't disclose the specifics, I mean, if you look at some of our customers and them reporting their results, you would see that at least at the premium high tier, there is some upward bias on those smartphone ASPs. So that's really as the tier in which 5G is penetrating first, and you're seeing some of the benefits roll through our customers' results.
Thank you. That concludes today's question and answer session. Mr. Rahman, do you have anything further to add
All
before
right.
the call?
Looks like we
As this
are
was Steve's
in.
last earnings call, I would like to take this opportunity to thank him for his leadership and tenure. It has been a privilege to work alongside him for more than 15 years through the good times and the hard times as we grown and diversified the company. I look forward to building on his legacy, and I'm humbled by the opportunity ahead. This is an amazing time to be part of Qualcomm.
All right, so that wraps the call. There's probably not a whole lot that we added. Probably zoom out for a better view to this, but I think you could clearly get where the focus points lie, and that's going to help us as we map out their strategy. But it's quite clear that the vehicle side, the IoT side, the 5G side are that's where things are happening. You heard a lot about the manufacturers, less so about the consumer and the operators of networks. Their business model being a licensing business model on the one hand, and then on the RF side, building the silicon, manufacturing the silicon that goes into that, clearly important. But I think you can clearly hear where their strategy is lying. I mean, the wearables, and the reuse of the Snapdragon, which something that I brought up as we begin to wrap up here. This is the Snapdragon modem RF systems in a bunch of providers, so you can see where they're sitting in these things. And I guess the Snapdragon has various modules to it, as you can see in this section here. Whoa, sorry about that. And so you can see the types of phones that have got these various components in it that essentially Qualcomm own. This looks like quarter 2. And so you sort of get they really got a big chunk of these components in many of these phones. Let's take a look at, here we go, this is the Google Pixel, which is almost everything. That's kind of interesting. They're talking on the call about the OnePlus. So where do they have openings? The antenna tuner, low noise amplifier. That's about it. Oh, and a big one on the 4G PA module, which doesn't really matter, I guess, any longer. So, you know, this is their core product. So, okay. I'm going to wrap this up at this point. I think you've seen that on the Notion board. We got a bunch of topics here. What remains to be done is to take these and map them over onto this Wardley map. I'm going to do that in a second video over the course of the weekend, just to give more time, and then I'll kind of show you how we do it. Now, we don't aim to take every item, and many things here you can see are repeated over and over. Really what we'll be doing is trying to put these into the right buckets, and as to are they commodity, product, custom built, or Genesis, and then put them into order from highest, where the highest items are the most visible components. You know, for example, the manufacturer who is at the top of this, we call that an anchor, and essentially it's everything that feeds that manufacturer, that feeds that operator, and you probably find that operator sort of fits underneath the manufacturer, and then you've probably got the consumer sitting there. And I would imagine these three, the consumer one is probably in the product space. The manufacturer is probably in the custom build, and then the operator is seeing this very much, even maybe as a commodity. So that's kind of how you would build out this hierarchy. Here's some of the notes I made on the left-hand side, which are just for my reference. But I think we've got enough here to build out our Wardley map, and so why don't you join me in the next video, and we'll start sketching that out. Thanks again for watching. Take care. All right, so we're now ready to draw out our Wardley map. If you remember, we had developed, using Notion, this idea of a breakdown between Genesis, custom build, product, and commodity. And we went through our public information, extracting some of the key points that were relevant. Essentially, that were relevant to the value chain. Where at the very top we had the consumer, manufacturers, operators, and then we filled in all the value items under them, what each would need from a higher level. These are the most visible ones to these people. And then as you go lower, those are the more hidden components that you don't always necessarily get to see. And now we're really going to start building our Wardley map, and for that I go to a tool called Online Wardley Maps, which you see over here, and it gets quite easy to use after a while. So what we're going to do is begin by entering a title. And this is Qualcomm second quarter 2021. And then the commands up here, essentially you've got the save that you can periodically use. You've got this ability to put auto save on or off. I don't like using that. I find it does some weird things as it saves automatically. So maybe newer versions are working better actually, and I should maybe look at trying that somewhat. Anyway, let's get going now, and essentially we're extracting components from here and putting them in over here, and then we're going to enhance this quite a bit from that point onwards. So the first thing we should do is probably starting at the top, we begin with consumers. And so this is what's known as an anchor, and consumer, that means it's sitting at the very top. It has nothing higher above it, essentially. Now, this consumer would typically consume a lot of the products of Qualcomm. And then we probably have a few more that we need to add. Let's also look at component OEM, and essentially that is coming from some of these over here that we're extracting. Sorry, that was an anchor, not a component. I think one of the other anchors, actually this is probably more like a component, and you'll see why in just a bit. I think the other component or anchor that I have in there is a, actually I don't have it in here, but it's really these engineers, or I call them designers, who sort of build using the Qualcomm chipset. So they sit much more in the custom area. And underneath these, as we had an OEM, and then we have these manufacturers. Now, I'm going to put this on my other screen, which is over here to the left, and I'm going to use that so that I have two screens sort of operating at one time. So that's why you'll catch me glancing over that way. So we have the OEMs, and then we have a component which is manufacturer. And the manufacturer is sort of going to be straddling in the product area. The OEMs are probably also very close by, all sort of working towards or underneath the consumer. We also have this user called a operator, which is really the operators of these wireless networks. So we're basically, as you can see, filling in the various people that, you get the consumer. The consumer deals with operators. The operators are dealing with OEMs and, they're dealing with manufacturers, and OEMs are probably feeding into the manufacturer part. And so what you can do now is you can begin to create these links. And we have sort of this link structure being created. It's a nice new feature that they've added. You used to have to go write this code that you see over here. So what you'll notice is that a whole bunch of code is being written as we do these various components over here. But really, it's kind of becoming more and more intuitive where you don't need that any longer. So that's becoming pretty useful. So after the OEMs, manufacturers, let's start getting into some of these other users that I wanted to sort of address. And probably the next big one is licensees. And I feel that the I feel that these licensees are tending to feed sort of much more of the folks that go ahead and design the stuff. So you've got the licensees, and then we've also got one other, because these guys are very concentrated, Qualcomm, in where their products are really sold, and I wanted to pull that out. And China is sort of a big piece of that equation. So we'll sort of fill in China over here, and part of that consumer market, so to speak. So and you could draw a line between manufacturer and China too, I guess would make some sense. Just to indicate that relationship, and just sort of tidy up. One thing I recommend you do a lot of is saving, and it turns green once it actually has saved it. Okay, so our diagram is beginning sort of at the hierarchy to take place. So if we sort of look at I think what we'll do is we'll begin fleshing out this section here first, which is really all the stuff that they manufacture, all the product lines that fit in here. Over on this side, we'll get much more involved in the sort of intellectual property side, which tends to be the licenses and the strategic initiatives. Maybe we can go ahead and put in that component for strategic initiatives. Now, strategic initiatives are really the sort of venture capital funding that they do as they sort of develop products that really feed into this network. This is where they acquire various companies or intellectual property. So they don't all fit into the designer piece sort of directly. They obviously filter across like that too. For the moment, I'll come back to that. For the moment, I'm going to tie these pieces together like that. Sometimes you want to keep this a little bit less cluttered, otherwise you have too many lines crossing over. So we'll come back and revisit the sort of logic behind this as we grow it out. So just to show you on this screen where we are, we've covered off on a lot of these sort of high level items, you can see. And now I want to drop into a lot of these that you see right here in this section. So, we're talking about modems, computer vision, sensors, all that type of thing as we sort of go through this game from top to bottom, where top are your most visible components and the bottom are your less visible. So let's get back now and start sort of plugging those in. And I think really the next one, so to speak, is what I'm going to call the product mix, which really talks to their product mix, so to speak. So let's go and pull that out and place that there. That's interesting. It got a little bit frazzled. This software is updated quite frequently, and I notice changes as things evolve. So product mix, I'm put right in the middle of the product sort of spectrum, and we'll sort of draw the lines of the users there, which are your OEMs sort of feed in, and China I think would feed in. Everything is sort of feeding into this product mix piece here. It's very core to what Qualcomm do, and I'm going to sort of bring it down there. Let's shift this OEM a little bit out just to make this more readable. Probably something like that. Strategic initiatives there. Don't forget to save this guy. So probably make that line a little bit straighter. And so, you're starting to see these components. China is tending to be much more of a commodity player. Strategic initiatives and licensing, design work are much more custom built. Manufacturing is about product. OEM is also about product. In fact, OEM could be there potentially, but I'm going to leave it there for the moment. So now what we'll start doing is let's start building some of what makes up the product mix. I'm going to go fairly quickly here, and less talk and more typing. No, oops. One thing that does happen is it overwrites in the space a little bit, which I find a bit odd. What I'm doing is just placing these on a sort of spectrum of how productized these are, and again how visible they are to a consumer really, how much is hidden. And so you can see the sort of most visible ones sort of creeping up towards the top there. This one is a little bit more, I would say, buried, and Bluetooth is much more of a commodity in today's world. Chip technology there is well founded. IoT, well, actually, IoT is more in the sort of much more in the custom build sort of product space. It is somewhat productized by now. WLANs are up there, sensors, and we're sort of getting a little bit more stuff that's not that apparent to the average consumer. Now let's get into some of the sort of larger products, so to speak. Oops. I'm just going to place these in a sort of temporary space. I'm placing these randomly for the moment. Edge computing is very much part of the IoT world. CPUs sit somewhere in between that sort of whole world of wearables. Probably worth now, in a second or two, drawing some of these lines. Let me see if there are a couple more items we can bring into the story. These are the whole range of vision products, which sort of is right underneath the sensors piece, if you get my drift here. And I'm sort of gently moving these products to sort of more custom built, some of the more utility stuff. There's another sort of sensing element. So this would be all the chipsets related to location. Now we're starting to head towards sort of the smaller components. I wanted to bring out one other one here, just similar to CPUs, which is SoC. That's a system on a chip, essentially. It's probably somewhat of a higher level So we'll do some restructuring over there. Of course, this thing is now gone. Seems to be a little bit of a bug here. Nothing that a refresh couldn't fix up. I feel like the SoC sort of sits in the middle. Why is this is sort of drifting out, and then we start getting much more into your sort of self-standing components. Next one is modems, modem chips, and antenna. I'm sort of bundling these together because we're not too concerned by the we're not focusing in this discussion on the products, but more how they create their value chain. What are the components that sort of come into product mix that these guys are buying from them? I've noticed that this is sort of a big area, radio frequency innovations that they are getting into. So, I'm drifting this because these are becoming much more custom sort of items. Then you've got these things called codecs. These components, these sort of designers use these all to build their products, essentially, their electronic products. So underlying all these chips is this world of, how secure they are today and the vulnerabilities that many of these electronic components may have. So there's obviously that sort of value piece that can be offered. And then there's also this whole aspect of power consumption, which comes into play, because obviously you're continually pushing that curve of reducing power consumption as much as possible. And then I've noticed that a big piece of or a lot of the discussions in offering is around charging, which is really around sort of how the electronics used to handle the charging of many of these sort of gadgets, electronic gadgets. So, okay, this is sort of their the core products in their offerings. There are some others we're going to bring out shortly, which are much more in the sort of custom build space. I think that's enough for now. So what I'm going to do now is start tying these products now together into the product mix piece, which is sort of central, as we've mentioned before. So let's do it. And really, to make my lines, I could draw lines from product mix down to every one, but I think that's going to look super ugly. And I think this tells the story. Wearables and typically have all these components feeding into them. CPUs certainly form the kernel of everything. Even system on a chips will have CPUs, and of course wearables will have system on a chip, and wearables will have Bluetooth, and then these items, they just sort of feed into each other, is the picture I'm trying to describe here. great. That is starting to look quite useful at this point. So the next thing we're going to come into, whoops, you can see this is sort of built out those, sort of writes it in a little language of its own, which is really nice. Something that I like to do as a sort of good habit is in Google Docs, I'll open up a document and I'll go to this section here and I'll paste it in. It's just a nice, gives me a secure feeling if I back this up. And it also helps me with my spell checking, because this application doesn't have a spell checker, and so I can very easily fix them. And that should, you can simply then, what's nice about this is you can take this whole thing, simply paste it back in, and you should get, in theory, everything back, except it looks like, not sure, you can see there's a spelling. I wonder why that didn't pick it up. That would have been there. For some reason it didn't. Okay, great. So we're running a little bit of a backup here, and we're starting to build this out. So now we get into some of these much more interesting components. For example, on-device AR, which is a sort of biggie, if you will. And this one is fitting very much into the space of custom built stuff. And we'll tie that together in a bit. I think I'm going to start building out these over here, which are all around their licensing and strategic analysis. The only reason this is out here is because it tends to be a little bit more in the custom world today. I'm going to tie this in to product mix like that as we sort of start evolving. So now let's start looking at these other items. So firstly, from a licensing perspective, you got this patent portfolio that Qualcomm are so well known for, really. Could be argued that's a product today, but I'm going to sort of put it out there, and we can link that to there. And then under this patent portfolio, let's sort of expand that out a little. Just keep everything on screen for you. So then we have the licensing of this product portfolio, patent portfolio. And then with patents, you always get disputes. That's a big, they must hire bunches of attorneys dealing with these on a sort of custom one-off basis. Perhaps they're applying some AI to help them with that. And then you've got sort of all your IP protections that go on. You're heading towards a much more standard thing. I mean, there's nothing revolutionary about IP protection anymore. Now, sort of part of what these designers also get is a, I'm going to call system software, which is really the utilities to help them with their design work. And I'm going to sort of put that up there. I may have to play a bit with spacing, just a bit. And then these strategic initiatives are all about acquiring early stage companies with nice and interesting ideas. And these guys would all be in the genesis phase. As we sort of tie that together. Okay, I'm also going to put down a component here which talks to security breaches. Now, that earlier security we talked about over there was much more related to on-chip security. This is sort of related to security breaches, which could be kind of part of the whole intellectual property, chip design, that type of thing. So that could come into play over there. I think we can sort of move these down a little bit lower. I mean, people do get to see a whole bunch of this in Qualcomm's business model. All right, so a couple more things that we need to do is start looking at sort of how this China model evolves out, where fabrication, that type of thing occurs, and also talk a little bit about the employee side of the house, which I'm putting a little bit more on the custom side. You know, the engineering talent, the R&D talent, sales and marketing talent, retention of people, which is probably very important. But for the moment, let's start tying some of these together. Now, in a lot of Wardley maps, you'll see them linking every component to every other component which feeds into it. I don't like that because I struggle to see the patterns. I kind of use this as almost like a weather map. You've seen in weather maps how you can see the sort of the front moving in and out, and I sort of prefer that approach to things. And it really gets pretty cluttered when you do it that way. And it's hard to see patterns. And at the end of the day, this is about seeing patterns and formations. So that's a personal preference that I have. I'm going to shift the designer just a little bit up here, and then the designers are very much using this system software, as do all these other components feed into it, but it's sort of what I would envisage as maybe the priority. It's probably, I think we could put it there because it's got some fairly high visibility. That's the stuff that helps designers really put together the kit that they need. Okay, I think this is beginning to take shape. Let's now grow out this little piece here. Also tidy up some of the spacing that we've got in our source code. And let's now look at expanding this China bit. So one thing that's important there is sort of this notion of what the addressable market is. Because again, we know that China is, oops, I didn't bring that dot with me. This is sort of much more of a commodity play now. So how big is that addressable market that they're after, with China being the concentration? And then this starts looking at sort of where their product really lands up. And obviously handsets is the big one. And then we start saying, okay, well, what is in a handset? So we're starting to dissect that a little bit. And a handset is made up of a operating system. And so what's important about that is that different operating systems sort of license these products, are licensees of this product. And as anyone who's followed the space knows, Qualcomm were sort of big with Apple and then had a very nasty divorce. And so they're now only in the Android operating system space. So that's why we sort of bring that out in the value proposition. And then underneath that component is smartphones. These operating systems then build out smartphones, which are super components at this time. I don't think you can argue that you get much unique, well, you get small innovations. Now, making up these smartphones is their Snapdragon sort of chipset. And we'll paint that like that. So Snapdragon includes many of these components here. And the big one, the big elephant, is their whole chipsets around 5G, 4G, and 3G. That's where they're really famous. So this is a much more, what I would call, high level sort of value chain, which focuses on a lot of the stuff that we see coming out of China and the Android, the Android marketplace. So we're really here describing these sort of generic Android phones that you see every day and how Qualcomm sort of fits into that infrastructure. And then, sort of underneath this is all the production that takes place. How do these chips here, these pieces get produced? So we start getting into that discussion now. Now, one thing you can do nowadays is you can simply double click and type stuff in. That's a new feature that they added in just a couple of weeks ago. So you can sort of figure where you want to be. Just makes things even quicker. This is not a bad product, actually. And it's open source fully. So we get production and fabrication, and then you get into this concept of foundries, and they do have some fabrication and production facilities, and you get into this whole fabless where the chips are made outsourced, and then part of this whole foundry thing is, kind of defect management of components. Really important sort of piece of the equation. And then what we're hearing a lot about right now, which is the shortage of raw materials that goes into the fabrication process. Actually, raw materials is very much in the commodity space. Defects less so, and foundries. So probably that's just I exaggerated that a bit. And then under raw materials is probably worth mentioning supply and sourcing. So all very much part of the process. Okay, great. So we'll just create a link. Oops. Occasionally I'll go click a bit crazy. This new features made it go much quicker. I can vouch for that. All right. Sometimes you tend to exaggerate these pieces and put them too far out to the left or right. But you're trying to show here how these are much more evolved products, much more commodity-like products. The reason you sort of start turning in is this becomes they're continually evolving these, and obviously we're in the 5G world now. And then you get into production world, which is, much more product, as is fabless and fabrication foundry. Defect management today is, I wouldn't call it commodity, it's probably product. And then the whole raw materials side of things. So very good. Thing is starting to come together. We're almost complete in terms of all these various components that we've sort of extracted. Now, I haven't extracted every component here. Sort of grouped them together into what makes sense to me. Suppose someone else doing this may have a slightly different view, or maybe a very different view. One thing that we sort of left off here, which is important, this one straddles a lot of places. I'm going to put it in there. It's regulation sort of / legal, which is a big chunk of sort of that value chain. And sort of regulations that drive a lot of what they do. And I'm going to try and depict that by actually bringing that in like that. I'm also going to bring SOC. So the final piece of the map really is going to talk about employees. Employees could be placed anywhere really. I'm going to create as I did earlier, it was up here, an anchor called employees. And there it is there, and I'm going to sort of leave them. I'm going to bring it down over here, since they're not that they're visible, of course, but they're less visible. You know, they sort of, everyone knows they're employees. And then I'm going to put a couple of the important disciplines. Now, engineering is clearly in the Genesis space, because that's all about innovation and building new product. And then you've got the R&D capacity, and that's also very, you know, it's very much in that space. In fact, I might be inclined to switching these to R&D being, you know, about the genesis, and then engineers are about the custom building, putting together the pieces that you need. And then I think one other one, which is more into product, but is probably more visible, would be sales and marketing. Great. And so what we can do there is create a link . In that sort of fashion. Now, obviously, employees are feeding this whole machine here, but I don't want to create those links. I want to, you know, that's kind of obvious to everyone, I think. That's pretty clear. So what I'm doing now is just sort of, I play around with this a little bit just to get it looking right and sort of bring out the messaging just a little. Like, I'm wondering that IoT is probably, you know, a little bit more closer to the custom work that's going on. Edge computing, probably a little bit too, actually. Sometimes you have some issues with moving stuff around in this product. I'm happy with product mix. That sort of line there describing, you know, I feel like charging power and security is sort of more of a, you know, a lot of stuff happening there. Whereas a lot of these are, I think, fairly routine product type activities. So we'll save it at this point, and we're sort of getting ready now to move into the strategic gameplays, which is the fun part of this. And at this point, I like to bring up the color in this thing. You can get different styles, but I like the color selection, and it sort of switches to the color that you need. Now, you can do some note taking anytime you like, and probably worth noting a couple of things that I have thought about. This concept of vertical integration, where, in a lot of cases, the consumers are vertically integrated. Consumers here are clearly, the manufacturers, guys that build cell phones, electronic devices, and there's a lot of this vertical integration type aspect to what they do. And then I think the other message to bring out, which was very clear in everything we read, was this concentration in China. I think it's going to impact a lot of sort of the thinking. All right. So what we're going to do now is describe the gameplays that I've certainly come up with. And I'm going to paste in, these are not the gameplays, by the way, it's just my placeholder for the way that I like to sort of mark this up and annotate it. So there are a couple of gameplays that are, to me, evident. The first one, which we all know about, it's no secret at all, relates to the whole patent and licensing side. And that's a very obvious sort of play. And intellectual property. So pretty clear there, and everything went crazy. So probably a refresh time. So that's the first one. That comes to mind. Just looking here how this thing has inserted a whole lot of random stuff. There are bugs. The next one that I think is pretty evident is the standards game. I mean, that's, for folks that are involved in this space, that's very much it's a key part of how everything sort of functions. It's building on a lot of different standards that have been created by standards bodies and sort of innovating off these standards. So even if you could set a standard or help define the standard, certainly gives you a strategic advantage. Now, I haven't yet put standards in here, but I definitely think it's a component, probably less visible. And these are the standards that, like, the Institute of IEEE will set, and so on, so forth. So I think, Qualcomm are part of that process, and I think it feeds into a number of areas that we could depict here. Obviously, the patterns can be driven around these standards. I think these strategic initiatives tie in here, and probably the system software that helps the design teams. Now, obviously, standards also fit in here, and I'm inclined, because of their significance, is to sort of, no reason we couldn't put in a second component, and I'm just going to drive that actually. I think that makes it doesn't like that, so I'm going to just give it a slightly we might as well call that standards version 2, and then because there are going to be multiple standard bodies around this, so I think that's and I think probably standards play into the production side too, and I think that gives that picture quite nicely. Some of our writing just needs to shift a little. There we go. So that's the other sort of component of the strategic gameplay. I tend to come up with 3 when I do this. I find that's the most sort of 3 is a good number. And then I think the other one is direct investment, which is this whole acquisition play that they are involved in. So you can see these sort of there's the bundle. In my mind, those are the core strategic gameplays that they are actively involved in. It's interesting to me that they're all sort of very much around this space here, because they feed into all these components that are built. They're the drivers, right? The patents and licenses, the standards, and then these strategic initiatives. They drive all these pieces here and all these pieces here that get built. This is where they monetize the business. And this is really where the costs sit around this business, is probably a good way to think about this. So you can see the map is taking shape now, starting to make a bit of sense. We can bring in some other things now where we could sort of highlight this area here as being, the big driver of, sort of the cost driver of the business. And there are different ways to do that in a Wardley map. So what we can do is draw this little box around it, which is sort of the pioneers, if you will, which is where all the pioneering activity is taking place. So we can get this a little bit more accurate. Go. give it a little bit more height. That's not bad. And so, what we're doing here, I actually think we should make this a little wider. Cover some of those more So that's sort of telling a story of very much of the pioneers sort of driving value into these other sort of areas. And the one thing we could do is we could also do some, on this product mix, we could evolve it. Meaning we can point out that this whole area here is moving more and more to commodity as these items sort of, I guess they fall off the radar eventually. You get these items sort of replacing them. Sort of ties in a little bit with that weather analogy that I was mentioning. So we can build a little bit of a evolution. Evolve. You could do this. I'm going to evolve product mix. And let's try 0.95. That's far too aggressive. 3. That's going in the wrong way. 5, 6. It does tend to make this a little messy, but it does tell a story which I think is quite useful in the way you think about this. It's really telling the story that these pioneers developing the innovations are essentially pushing or helping to push this curve, these sort of bands outward from product to commodity. So it's probably worth saving this. There's another element that I sometimes use which is known as a pipeline. And it allows you to sort of show how a component is connected to other components in a sort of pipeline of activities. Kind of think of it almost like vertical integration. Now, I'm inclined to think that the part of that is very much this move from standards to patent, and it's sort of that push. But I do think that this product mix evolving is telling that story. We could have contemplated building that a little bit. Just going to experiment a little bit with this map. Because the beauty of mapping is there's no real fixed position. It's very broadly defined positions. So I'm trying to set this up to kind of describe a pipeline. Okay. I could have probably drawn you see, I don't think product mix is necessarily a pipeline, but I do think there's a pipeline that exists between standards, patent portfolio. So let's kind of experiment a little bit with that. We're going to build a pipeline component from standards, and just you begin sort of by putting in random numbers, seeing where that there we go. I want that to be really short. So we could push this sort of in that way. It's sort of let me just take it back like that, and that was the patent portfolio right there, which is really our strategy number one. I'm going to sort of tie those together. Yeah. Get some clarity there. Bring licensing down. Okay, good. And okay, let's save that. So probably need a refresh at this point. And I'm going to do the good old backup. Hopefully I spelled things right. It's always in the beginning I spell things wrong. So it looks quite good at this point, and it is certainly, for me, hopefully for others, telling a story. Very much around the pioneer community. And if we like, what we could do is just add one more note. And that highlights that. Okay, so telling a story, those are the strategies. You've got your pioneers building this. You've got your standards to your patent portfolio really being a pipeline which is pushing the evolution of your product mix out that way. This is where the money is generated. This is where revenue is generated. That's where the costs come into play.
So thank you for watching, and I hope you enjoyed this. And if you want to see more of these Wardley maps, more of these strategic gameplays, please hit the subscribe button found below, and you'll get notifications as soon as I publish one. Hopefully you found this interesting, and as we drew out the Wardley map, you get an idea visually of what the strategic gameplays are and what the strategy of the business looks like. Thank you for joining. See you soon.